Welcome back. Well, Reliance Mutual Fund is set to launch its second tranche of the CPSE ETF tomorrow, and it's open for subscription till the 20th of Jan. We're now joined by Feroze Azeez, the Deputy CEO at Anand Rathi Private Wealth, and Hemant Rustagi of Wise Invest Advisors to take us through what they think of the CPSE ETF and whether you should be applying for that. Remember that it is 10 PSUs together which comprise of the CPSE ETF, and it's given returns on a CAGR of 17% since the inception versus the Nifty, which is up over 8-odd%. Feroze, thanks very much for joining in. I'm going to start with you, and we'll go to Hemant right after that. But what's your sense? Are you going to tell your investors to invest in the CPSE ETF, your clients?
Yes, sir. I think it's a very good opportunity. It's a very good opportunity from a perspective of getting a 5% discount on the most, probably the highest dividend paying stocks, the large ones. So I think it's a big opportunity for the 5% discount and the 4% dividend. And since, unlike the last time, it was being managed by Goldman Sachs, now Reliance has taken it over. So the largest asset management company, or the third largest mutual fund house, is managing it at an expense of 0.06 or 0.08, which is almost 1/20th the cost of any equity fund. So you get that 2% kicker, 2.5%, which is a normal expense of a mutual fund. So you get all these buffers which create a risk cushion for an investor to actually participate in equity and have a 8-10% cushion on the downside. So I think it's a very, very good opportunity from that perspective. Risk reward is favoring, because on day one you're sitting on 5 plus 4 plus the expense ratio, which is 2 clearly. So.
All right, Feroze, strategy as well that's playing out that you were telling us. You want to explain that to us?
Yeah, absolutely, Nigel. I think there is, for a sophisticated investor especially, if he wants to transform this ETF into a pure risk-free instrument or reduced risk instrument, he can go long on the ETF, by which I mean he can apply for these units. He gets a 5% discount. He gets a 4% dividend, which has been paid in the previous series as well. So you have 9 already. And then if you short the same 10 stocks, like Hemant was saying, it's concentrated across 4 stocks. So logistically, it's easy to short these 4-5 stocks. And start collecting a premium across 12 rollovers in a year. If you did that, then you would have about 4-4.5%. Last 1 year premium on these 4 stocks in the weighted average method is about 4.3%. So I have 5 plus 4 plus 4.3. That's a large corpus. That's almost 13%. And in a year's time, tax will depend on how these stocks move, but at least 13% with negligible risk, because you have short the same stock. So this works out to be a wonderful strategy in a falling interest rate scenario.
Quick question. Would you recommend this versus a PSU MF to your clients, a diversified fund?
No, I would choose this ETF very clearly, because there's arbitrage opportunity.
Okay. All right, Azeez as well as Hemant, thank you very much for joining in and taking us through the CPSE ETF. So a bit of diverse views there, but nonetheless, this is going to be something which will see a lot of interest probably starting tomorrow up till the 20th. We'll take a break now, but we're going to be focusing more on the markets once we're back. Stay tuned.